Welcome back to the deep dive. We always love digging into complex topics, and this time you sent us a pretty interesting piece of analysis to explore. The Economic Quarterly Q1 2025 report from ATMTA, Inc., all about the Star Atlas metaverse.
Yeah, this report, it really is a fantastic deep dive into the economic shifts that are happening in Star Atlas. And this is for the first 3 months of 2025, pulling in data from broad economic trends all the way down to specific player activity with some really insightful visualizations too.
And, you reached out to us specifically to help unpack this. I mean, this report, it is comprehensive. So our mission today is to extract those key changes, those emerging trends, and really give you a solid understanding of how this economic landscape is evolving and hopefully highlight some potential opportunities along the way, all without, getting bogged down in the finer details.
There were some really interesting developments that happened in Q1. For instance, the reintroduction of the faction infrastructure contracts. We also saw the launch of a brand new fleet rental platform. And of course, the continuing expansion of those local markets within Sage. And we'll also be looking at, how wealth is being redistributed and what's happening with the overall economic output.
Okay, so let's break this down. Let's start with the big picture. What was the overall economic environment like in Star Atlas during this first quarter of 2025? The report really seems to point to a period of significant change.
Definitely. One of the major factors that contributed to this was the reintroduction of those faction infrastructure contracts, or FICs for short. Basically, these are craftable items that players can redeem for ATLAs, and you can only redeem them in specific local markets within Sage. So it's a way to kind of stimulate targeted economic activity within those local hubs.
Alongside the FICs, we also saw the launch of the fleet rental platform. It seems like that has the potential to be a real game changer. Players now have the option to lease out their ships.
Oh, it completely opens up some new economic avenues. Think about it. Players with larger fleets, they can generate income from assets that would otherwise be just sitting idle. And at the same time, other players can access a wider range of ships without having to purchase them outright. So they can participate in a whole bunch more activities.
And what about those local markets that we've been keeping an eye on? It sounds like they continue to grow in importance. They're becoming a bigger part of the overall economy.
Absolutely. The report really highlights their continued expansion and their increasing share of the daily resource trades in Sage. We're seeing a definite shift towards a more distributed economic model, at least in some aspects.
And if we look at the population in Star Atlas, there was a slight increase, something like 1.1%. So a little bit of growth there.
Yeah, the population went up just a smidge, from a little under 145,000 to a little over 146,000. But here's where things get really interesting. Even though there was a small increase in players, the total wealth in the ecosystem actually contracted, and by a significant amount, almost 40%.
Wow, that's a pretty substantial drop. The report indicates that currency depreciation is the main culprit here. So the value of ATLA itself decreased.
Right. It looks like the value of ATLAs went down, which caused that reduction in aggregate wealth, which landed somewhere around 91.7 million ATLAs. The report probably goes into more detail on the exact factors, but it seems like increased ATLA emissions from these new mechanics might have outpaced demand, so that would dilute the value.
And it wasn't just the total wealth that took a hit. Star Atlas GDP also trended downwards for a good chunk of the quarter.
Yeah, the aggregate GDP had a 44% decrease, with the daily average settling at around $33,568.02. So we can see that overall economic output was down for much of this period.
However, the report does highlight a bit of a turning point, something that helped stabilize things as the quarter came to an end.
Right. That's where the fleet rental system comes in. It seems to have been a really crucial addition. They saw signs of recovery in daily production almost as soon as players started using the rental platform, which shows the impact that these new economic drivers can have.
And we can't forget about the Golden Carnival. It sounds like that played a role in the overall economic picture as well.
Oh, definitely. The Golden Carnival acted as a kind of economic stimulus. You see all those resources that participants burned. The report estimates it to be around 158 million ATLS, which is huge. That effectively reduces the overall supply, which in turn can help support the value of the remaining assets. Plus, there were all those ship prizes given out worth over $4 million. So that injected some fresh assets into the economy, and we saw a little bit of wealth redistribution as a result.
So going back to the local markets for a second, It seems like they really started to dominate the resource trading landscape.
They did. By the end of the quarter, local markets in Sage were handling over 30% of all daily resource trades. And that's not even including what's happening at the central station services. You know, the CSS, those are like the main centralized trading hubs. So the influence of these local markets, it's definitely growing. We're seeing a move towards greater regional economic activity.
Now, what about the players themselves? What were they doing with their fleets? Did the report offer any insights into changes in fleet activity?
Yeah, the report kind of hinted at a pre-combat environment based on the fleet preferences they were seeing. It's like players were strategically positioning themselves, maybe acquiring specific types of ships in anticipation of those combat mechanics being implemented in Sage, and this was happening alongside the increased activity we saw with the fleet rental system. So it seems like players were both preparing for potential conflict and taking advantage of these new economic tools.
Okay, so we've seen that a lot of different factors were at play in that first quarter. Now let's dig into some of those key highlights that the report called out. First up, it looks like the O&I faction really killed it in terms of productivity.
They did, even though they didn't necessarily have the biggest share of the overall wealth. The O&I faction actually earned 12% more ATLS than both MUD and USD during this period, so they were the most productive. The report even mentions Figure 3, which visually shows those differences in daily emissions for each faction. And as we'll see later, O&I was really quick to adopt those new faction infrastructure contracts, which shows how important it is to be adaptable to those new economic drivers.
That's pretty fascinating. It really highlights that just having wealth doesn't mean you'll have high economic output.
Yeah.
Maybe O&I just had better strategies or their focus areas were more aligned with these new economic mechanics.
Yeah, that seems to be the case. As we dig deeper into the report, we'll see that they were really quick to capitalize on those FICs.
Now, we touched on this earlier, but that Golden Carnival, it had a huge economic impact. 158 million ATLS worth of resources burned. That's a massive amount.
It really is. And the way it was structured with the distribution of those valuable ship prizes, not only did it remove resources from the economy, but it also put those assets directly into the hands of players, creating a self-regulating economic cycle. That $4 million in ship value, that's a pretty significant injection of assets.
And we talked about the GDP contraction, that 44% drop overall, but the report does point out those signs of recovery towards the end of the quarter, specifically linked to the launch of that fleet rental program. So it wasn't a continuous decline, but more of a dip followed by stabilization.
Right. It wasn't just a straight downward trend. It looks like the introduction of that new mechanic played a big part in injecting some much-needed economic activity, and that helped stabilize the overall production level. So it shows how these new gameplay loops can actually revitalize the economy.
Okay, so let's talk more about the fleet rental program itself, because it seems like it was a success right out of the gate. Over 1 million ATLAs per day generated for the lenders. That's a pretty substantial new income stream.
It is, and they saw an 80% contract acceptance rate across all factions, which really underscores the high demand for this service. Players were clearly eager to both offer their ships for rent and to rent ships from others, so they could participate in more activities. The report actually references a few figures and tables here. Table 2 gives you those initial stats, and figures 10, 11, 13, and 14. They illustrate different aspects of the program's adoption and its effects on the economy.
And it wasn't just the lenders who benefited.
Right.
It seems like it stimulated overall activity within the metaverse. The report mentioned a 15% average increase in active fleets after the launch of the rental program.
Exactly. And if we take a closer look, they saw particularly large increases in demand for small and X-small ships, like 15.6% and 11.6% respectively. So it looks like players were looking to use those smaller ships, maybe because they're more specialized or versatile, and they were using the rental program to do that, to support a wider range of activities.
And going back to those local markets one more time, we know that the volume share went over 30%, excluding CSS. And the report mentioned these large price discrepancies, which are creating some arbitrage opportunities. What this means for you, our listener, is that if you see a resource selling for very different prices in different local markets, or compared to the galactic marketplace, you can buy low in one place and sell high in another, and make a profit. The fact that these price differences are so large, it really suggests that the local markets are still developing. They haven't found that perfect price equilibrium yet, which creates opportunities for those who are savvy with the markets. You can actually see these price variations in figures 21 through 25 in the report.
It's kind of like finding something on sale in one store and then selling it for full price in another. That price difference, that's your profit. And the fact that this is happening in the local markets, it shows that those markets are still maturing. And there are definitely opportunities for those who are paying attention.
So it really pays to keep an eye on the different markets,
Yeah.
even within the metaverse. The last key highlight the report mentioned was how those who were most active across multiple programs, they were the ones who performed better economically. It seems like a pretty basic principle, right? The more engaged you are, the more opportunities you have.
It does. It's like the more you're involved in different aspects of the Star Atlas ecosystem, whether that's resource production, trading on different markets, participating in those events like the Golden Carnival, utilizing the fleet rentals, engaging with the FICs, the more you do, the more resilient you are to those market fluctuations, and the more potential avenues you have for economic gain.
Okay, let's move on to the specifics of ATLA submissions and overall activity. The reintroduction of those faction infrastructure contracts definitely seems to have had a noticeable impact on the amount of ATLAs being introduced into the economy.
Yeah, if you look at Figure 1 and Figure 2 in the report, they clearly show that increase in emission volatility after those FICs were brought back online. The mean daily emissions jumped up to 8.1 million ATLS, which is a 31.2% increase compared to the previous quarter. So there was definitely more ATLAs flowing into the economy.
Well, it wasn't all increases, though. Loyalty points or LP emissions actually declined.
Right, following a reduction in the total LP pool size, which happened right when they introduced the FICs. The daily LP emissions went down. They deliberately reduced that LP pool and then brought in the FICs. It seems like a strategic move by ATMTA to encourage players to participate in these new infrastructure contracts rather than relying as heavily on those loyalty-based rewards for ATLS distribution.
And we already saw how the O&I faction was pretty quick to adopt those FICs. The report suggests they were really well prepared for that change.
Yeah, Figure 4 shows that really well.
Yeah.
O&I had the most significant shift towards earning ATLS through FICs, so they were either better positioned or they were just more proactive about taking advantage of this new gameplay loop.
UD and US Tier also scaled back their reliance on LP emissions, but the report notes that they weren't as fast as O&I in ramping up their FIC production.
Exactly. And Figure 5 really reinforces this. It looks at the amount of LP ATLAs claimed per player per day. And what we see is O&I managed to keep their LP earnings per player pretty stable while they were scaling up those FIC activities. But MUD and US Tier, they experienced more of a trade-off. An increase in LP per player could mean that fewer players were actively claiming from that pool because they were shifting their focus.
Okay, now let's zoom out and take a look at the Star Atlas census data. We mentioned that slight increase in overall population, but the real story here is that substantial decrease in total wealth within the ecosystem.
Yeah, that 39.2% drop to 91.70 million ATLS. It really hit the non-resident currency group the hardest. They saw a massive 68.2% contraction in their wealth. So that really highlights the risks for those who aren't as integrated into the core metaverse economy.
But the report also points out that the resident and citizen groups were more resilient. They actually increased their share of the total wealth.
They did. It went up over 10% across the board. So this shows us the stability that can come with deeper engagement and a more diversified involvement in the Star Atlas economy. It looks like those players who are actively participating and those with a longer-term investment in the metaverse, they weathered these economic adjustments much better.
And that Golden Carnival that we keep bringing up, that seems to have provided a real economic boost specifically for those resident and citizen groups.
Definitely. By burning resources and distributing those ship prizes, it acted as a wealth stimulus, especially benefiting those active players who are more embedded in those resident and citizen structures.
Okay, so now let's do a deeper dive into the Star Atlas gross domestic product. We know that it contracted overall, but what were some of the specifics?
So the aggregate GDP saw that significant 44% decline. But the GDP per capita, that decrease was more moderate, around 25.3%. So this suggests that even though the total economic output of the metaverse went down, the impact on the average individual player wasn't as severe. And as we discussed earlier, there were those signs of a rebound towards the end of the quarter, thanks to those fleet rentals.
And if we look at the faction level, all three of them, USTR, MUD, and O&I, they all experienced GDP declines. But just like we've seen with some of those other trends, O&I had the smallest decrease.
That's right. Their decline was only 18%, which is noticeably less than the declines that MUD and US Tier experienced. So again, this indicates their relative economic strength. and that they were still seeing growth in certain areas, even during a period of overall economic adjustment.
All right, let's get into the nitty-gritty of those fleet rentals, because it really does seem like it's become a pretty big part of the Star Atlas economy. Looks like MUD had the most rental activity.
Yeah, Table 2 in the report shows that MUD had the highest number of rentals, and they also had the most competitive rental rates for the various ship classes. This could be because they have more wealth overall, so they have a larger supply of ships that are available for rent.
Interesting. And while O&I and US Tier had fewer rentals overall, their average rental durations were longer. What could explain that difference?
It could be that the factions have different rental strategies. Maybe O&I and USER owners were renting out more specialized or higher value ships, and they were doing longer term contracts, whereas MU was maybe focusing more on volume with those shorter rental periods. Figure 11 gives us a clue here. It looks at the VWAP of those outstanding rental fleets. And even though O&I had fewer rentals, they still had a strong position because their average value per rented fleet was higher.
And MU really seemed to jump out ahead in this rental market early on. They had the highest number of newly rented fleets and the highest VWAP as well.
Figures 10 and 11 definitely show that. They dominated early on in terms of the sheer number of rentals and the total value of the fleets being rented out. And there was that notable rental of a Pierce T1 Titan-class ship. Even though the VWAP was adjusted down a bit for visualization, it probably contributed significantly to MUD's lead in VWAP.
And it seems like O&I was more focused on those higher value rental agreements.
That's right. So MUD might have had more individual rentals, but O&I was focused on renting out those more valuable ships so they could maintain a competitive position in terms of the total value being exchanged.
And those daily rental payments, they were over 1 million ATLAs across all factions. So that's a lot of income being generated from this new rental ecosystem.
Yeah.
And figure 13 indicates that this is actually leading to higher production levels for those who are renting those ships.
Yeah, it definitely shows a clear benefit for those who choose to rent ships. They're gaining access to assets that they need to increase their economic output and their overall activity in the metaverse, something they might not have been able to do otherwise. So it seems like it's a win-win for both the lenders and the borrowers.
And with those high contract acceptance rates, it shows that there was a lot of demand on both sides of the market. Players were eager to both rent out their ships and to rent ships from others.
Yeah, those acceptance rates were between 75% and 85%. So that highlights the enthusiasm and the willingness to participate in this new economic opportunity.
And we talked about that increased demand for the small and X-small ships.
Yeah.
It looks like the introduction of the rental program directly led to that surge in interest for those specific classes.
It does. The rental system made it easier for players to use those smaller ships so they could do a bunch of different tasks, which then drove up the demand.
Right. Now let's shift gears and talk about fleet activity. The report mentions an increase in the number of daily active Sage fleets across all factions.
Yeah, figure 15 shows that pretty clearly. There was an increase of somewhere between 10% and 20% depending on the faction. So the rental program didn't just lead to a shift of existing fleets. It actually encouraged players to become more active by using those rented ships.
However, the average number of fleets per player either plateaued or went down slightly. What would cause that?
That's probably because of all those new players who are now operating smaller rented fleets. So even though the total number of active fleets went up, the fact that there were more users utilizing those smaller rented fleets would pull that average number of owned fleets per profile down a little bit.
Okay, now figure 17 is pretty interesting. It's a fleet VWAP map. What can we learn from this?
It gives us a visual representation of where the most valuable fleets are located on the Gallia map. At the time the data was captured, it looks like the distribution was relatively balanced within each faction's territory. There were a few areas with higher concentrations, though, especially those central zones. That probably reflects strategic positioning, for resource gathering, trading, and those other economic activities in Sage.
And the ship types that were contributing the most to the overall fleet value, they were the Thimble Airbike, the Calico Max Hog, and the Ogrika Rooch. Those were all pretty common ships in Star Atlas.
Yeah, figure 18 highlights how common they are. They seem to be the real workhorses right now. They offer a good balance of efficiency and accessibility for a wide range of activities.
Now, figure 19 breaks down fleet composition by size and shows that while those smaller fleets are really common, there's also a big concentration in that 140 to 150 ship range.
Exactly. Over 40% of those active fleets, they fall within the 0 to 10 ship range. So that tells us there are a lot of smaller scale operations happening. But those fleets in the 140 to 150 ship range, that just goes to show the continued importance of the XX small class ships and how widely used they are in fleet strategies.
Okay, this is pretty interesting. Figure 20 looks at the distribution of the fighter class ship VWAP, and it seems to show some potential defensive vulnerabilities across all three factions. And this is happening before any major combat mechanics have been implemented right.
Right. With combat in Sage on the horizon, the current distribution of those fighter-class ships suggests that all the factions might be a little underprepared defensively. It's like players have been focusing on ships for production, transportation, those non-combat roles, and the defensive capabilities haven't really been a priority yet. But that could definitely change once those combat features are rolled out.
Okay, let's go back to the expansion of those local markets. That continued growth really is a significant trend. Over 30% of all resource trades, excluding CSS, are now happening in these decentralized hubs.
Figures 21 and 22 make that really clear. And Figure 22 specifically highlights how quickly the O&I faction has adopted local market trading. It looks like they're leading the way in embracing this more localized economic activity.
And we've already discussed those price discrepancies. Figures 23 and 24 give us some specific examples, like survey data units, or SDUs. They're often cheaper in the local markets, but carbon sometimes has better pricing on the galactic marketplace.
Those examples just go to show how important it is to be an informed trader and to compare prices across the different markets. It's not always that one market is better than the other. It really depends on the resource you're trading and what the current market conditions are.
Figure 25 gives us a real-world example with copper ore. The average prices in the local markets are lower, and the figure even shows the most active local trading hubs for copper ore.
Yeah, it's a perfect example of how players can use those in-game economic dashboards and those community-developed tools to find those good trading opportunities. The larger indicators on the figure show where the most copper ore is being traded locally. So those are those vibrant and active markets.
The report really encourages players to use these economic dashboards and to join the monthly economic forum. It sounds like those are really valuable resources for anyone who wants to really understand the Star Atlas economy.
Oh, absolutely. Staying informed, using those official channels, engaging with the community's analytical efforts. It's all crucial if you want to navigate those complexities and opportunities in the Star Atlas metaverse.
Yeah.
Because it's always evolving.
Okay, so summarizing the key findings from the report's conclusion, it seems like the first quarter of 2025 was a pivotal time for the Star Atlas economy, with new ways to play the game and new market dynamics emerging.
Definitely. It experienced some market volatility and that overall GDP contraction. But the ecosystem proved to be pretty resilient, largely driven by that activity in the new fleet rental market, the impact of the Golden Carnival, and the growing importance of those local marketplaces.
And we saw how the different factions changed their ATLA submission strategies, finding a balance between that established loyalty point system and those reintroduced faction infrastructure contracts.
And those local markets, they're becoming a really interesting and dynamic alternative to the galactic marketplace, offering different pricing structures, new avenues for trade. It's a whole new way to interact with the economy.
Plus, those community-driven events like the Golden Carnival. They're more than just fun. They're actually stimulating the economy in a tangible and measurable way.
Overall, the report shows that the Star Atlas economy is adapting, and it's well-positioned for continued evolution, especially with the growth of those local markets and the expectation of more combat features in the future.
So we can expect things to become more robust and for there to be continued opportunities for growth as those new features and dynamics mature and develop within the metaverse.
Right. It's an environment that's constantly changing.
Yeah.
And those who stay informed and adapt their strategies, they're the ones who are going to succeed.
So for you, our listener, the key takeaway from our deep dive into the Economic Quarterly Q1 2025 report is this. The Star Atlas economy is going through some really significant and interesting changes. Even with those broader economic adjustments, there are new opportunities emerging, especially within the fleet rental system and the increasingly influential local markets.
And considering these trends, it raises a pretty important question. What strategies could you explore to capitalize on the growing demand for certain ship classes? We saw that with the rentals, or maybe take advantage of those price discrepancies that are popping up in the local markets. The Star Atlas metaverse is constantly evolving. This deep dive was just a snapshot of the current economic landscape, so being prepared to adapt to those changes could be the key to your success.